Hey, good afternoon, everyone. It's Friday after the market closed here. And just quick reminder Monday, the markets are closed. So, because of President's Day. So, there won't be any markets open on Monday. So, we won't put much out Monday. Uh, also, Tim should be back next week. So, you'll get to hear his lovely voice and we'll have to listen to me maybe. So, first off, I just want to go over some things. Not a lot of news this week. Some of the news was inflation's on its way back a little bit, which kind of means the Fed's probably going to keep raising interest rates, and that's never good for anything. If we keep raising interest rates, that usually doesn't end well for markets. Uh, so what I want to talk about today, because there wasn't just a whole lot of market action since our last video. Uh, we're going to talk about these spreads and what they're trying to tell us. So right here is what I have is the corn spread between the May contract and the D23 contract. And I just want to make note that last year, since same point last year and the point this year is we're almost double that spread. Uh, so in a good bull market on inverses, you have strong spreads, strong basis levels, and just so what's the market telling us today? Well, today, we're seeing some basis levels starting to fall just a little bit. We're seeing the spread between the May contract to the D's fall a little bit, and is that telling us that the market's going to turn over and die? Well, that's kind of getting to be the first steps, right? So for a good bull market, you need strong basis, strong spreads, and then futures will be strong with it. So with this, when we're talking about what happened last year, is we had really good corn exports, just off the charts corn exports. Uh, Brazil's crop was poor. They were in a drought. Now, what's the difference this year? Our corn exports are not good. I mean, we're way behind USDA pace. They've been good this last week, and probably the number will show we're pretty good this week. But overall, we're not nearly as good as we were last year on corn exports, and Brazil's crop is going to come in pretty good. So uh, that's just kind of why we're trying to hedge our risk here. Is if that occurs, that they've got a good crop and our exports stay pretty weak, because normally this time of year all of our exports start to fall off pretty hard. So just due to the fact of the Brazil crop and is coming in, so that's why we are saying keep your risk hedged. So that news hasn't changed at all. Now we'll pull up the March corn contract here if I can find it. Just not a lot of news. This was the report last week. We reversed from these same levels that have been holding for a while, this 689 area. We had a big day down 2 days ago, and we just kind of been piddling around down here. So not a lot of news. Seems like the market's just trying to figure out what to do, because you hear guys that are all in on the Sue Martins. We're going to all-time highs, and then you got other guys saying we're going to the bottom of the market. So I think the market is just trying to wait and see what happens with exports and the Brazil crop and go from there. So that's why we want to keep our risk hedged here. We're not changing that tune at all. There's just not a lot of news. So the soybeans, again, we're still inside that report day that went up pretty hard. We're inside the big drop of 2 days ago. Again, not a lot of news. I don't think a lot of guys were wanting to take a lot of positions going into the 3-day weekend. We were hoping to see the commitment of trading report to see what the managed money was doing, since those spreads weakened pretty hard yesterday or the day before. Just see if they were trying to get out of those long bullish spreads. But we're not going to get that. They're still having trouble with the data since the hack of a lot of the FCM's stuff, so they don't think they have the good enough data to put that out, which is good. Better not have any data than bad data. So again, not a lot of news. I mean, if we get below 1505, this is the March contract. If we get below, this low, you got to look lower, and especially if we break down below here, I mean, you got to really look way lower. I think that's going to be maybe showing a top that the top is in. New crop's a little interesting. It's banging on this 38% retracement from this drop to here. It tried twice. It backed up. It looks like it may try again. We'll see if it can break that, and we might have to make a decision if it can get out of this cloud, if we need to re-own any already sold bushels for 23 beans. But at this point, we don't see any reason to change our plan on that either. So stay tuned for that. Kansas City wheat. Kansas City wheat's been the stronger one, but again, we're still inside that report day after the reversal and the drop 2 days ago. We're inside this. This can be a little concerning as far as if you're holding a short position. This is known as a 3 inside up, and sometimes that can make a 3 to 5 days of more up movement in that, which very well could be. We could come test this 920 level again. If it breaks that, maybe even 950. But we really think this is the area. If it gets above that, you got to get long. But otherwise, these are probably more like sell points. So again, we'll keep our eye on that and keep you informed. So if we go to the July contract, as you can see, it's still inside its cloud. Hasn't been able to break out of it. So on your new crop sales, I think this one's pretty easy if you haven't sold any or want to sell more. If it breaks out of here, you want to hold it. If it breaks below out of it, you need to get rid of it. So you need to hedge that risk below it. So I think new crop wheat's pretty easy at this point. Just follow the cloud and go with it. But otherwise, I don't have a lot for you. Let's see. I want to get into the weekly charts here. The soybean weekly, it's inside its cloud. So again, that's fairly simple for us. We're kind of in this trend channel that's contained this increase in the bean market since October, September. So get below here, we expect this thing to fall out of bed, get above it, and then we'll have to reevaluate what we want to do there. The wheat weekly, not a lot going on. You're below the clouds. That's why we want to stay hedged. It's just not telling us to get really long. And corn, I do have an interest. I mean, if these all have the same almost a head and shoulders developing if it follows through. And if it does that, I would think you'd see the managed money's just really starting to hammer those things and get short. So that could be an ending head and shoulders on a weekly chart, which is pretty significant move. So again, if you have any questions, please reach out. We will be in the office most of the day Monday. Don't hesitate to email or call. We can try to answer any questions you have. Otherwise, have a great weekend, and remember, trading in futures and options carries significant risk. Trade in light of your financial conditions, and I hope you have a great weekend. Bye.